the major themes we want to chat about this week, most of them we ran through in last week's newsletter. Victoria, biggest auction week on record. As a whole, it was a huge week of auctions. Fantastic result. I'll run you through that in a minute. House prices just keep going up and up and up. I want to chat about what does that actually mean for you and your hip pocket if you are thinking about buying. As I said, renters, lot to talk about there. And as always, there's a lot of chat going on and on about the regulators and lending. Are they going to make any changes? I've been telling you for a long time, jump on and borrow as much as you can now. All right, let's have a look at the auction stats. So I will just share my screen right now. There we are, 84.4%. This would be about the 1 millionth week in a row I've been saying this. Now, 1 millionth, no, but I cannot remember a time this year that I have not seen a number with an 8 in front of it. Those of you that follow stats know once you get above, what is it, Lucas? Sort of 65, 70% is where we say it's a boom market in clearance rate.
That's right.
So you can see Sydney is absolutely going bananas. There is no stopping Sydney. It has been close to 90% for at least the last 4 or 5 weeks. Melbourne had its largest weekend for a long time, if not ever. Really depends as to who you listen to, and we'll delve into that deeper. And again, just a touch under 84%. You can see the rest of the markets there, very, very strong. Almost 4,000 auctions went over that weekend. Great result, and I think if anyone was concerned that this may have just been a one-off, it is going on and on and on. All right, let's have a look at some of the leading indicators. So realestate.com, those of you that have been here before know what we talk about here. These are what we call a leading indicator. They're just a bit of a prediction, a bit of a guess seeing on the current data. So this is what realestate.com produce themselves based on the data that they see happening on their website. So, you know, the number of people that are searching through listings, inquiring, clicking on particular buttons, they come up with a bit of an index. Now, it would appear to be a bit of an odd thing. We've seen drops over the last 6 weeks in that demand, albeit it is still significantly higher than it was this time last year. So I think the demand, you can see those lines, they're up. They're up on what they've been this time last year. They're up on what they were 18 months ago. And that's what we're seeing coming through in those auction results. Going into our home state of Victoria, you can see it's very much following the same trend. Up, up, up seems to be the only way to go. Perhaps some of the reasons why, those of you that are wondering, you know, that we're sort of not seeing it, it's sort of flatlining, and you're wondering why. Look, hard to really tell. As I said, this is just realestate.com. It doesn't include Domain, doesn't include Homely and some of those other sites. They are the biggest, so it is a pretty good indication. Look, could be some of those, you know, first home buyers. We're doing a big push trying to really search and looking for land just before Home Builder ended, which was today. So if anyone's still thinking about it, get your application in. You've still probably got a few hours to go. That's that. Looks pretty good. Let's have a look at rental. So rental is very interesting. You know, demand has been dropping pretty steadily over the last 6 weeks. It did hit its peak in Jan, which typically is a very busy time. I'm pretty surprised that you can see it's dropped by 19% since that peak at Jan. You know, put this in perspective. This time last year, when the lockdown first hit, and you can see that drop, we fell about 22% in the space of 3 weeks. Nothing's happened like that. I don't quite understand it because, you know, Lucas, you tend to be pretty much flat chat every single day with people coming through. How many open houses would you have done this morning?
I've done 9 so far.
9, okay. So there you go. I mean, that's 9, and what are we, 2:30? So, you know, look, definitely interesting to have a look at. I'm not sure whether this is really that indicative of what, look, at least personally, I can tell you what we're seeing on the ground with our rentals, but it is something to watch. Will be very interesting as we chat more about these changes in laws, particularly here in Victoria, where there's a new set of laws that have come in as well. Again, as I said, this could just be a bit of a change as some of those potential could-be first home buyers were focused over the last quarter, looking to see whether they could actually find something and a property to jump on to get those incentives before they disappeared, as well as, you know, obviously We know that this typically is usually a busy time with the influx of international students for the start of university that we haven't seen this year. All right, I want to know, this is my favourite question, what do you think is going to win the day? Is it information or knowledge? So, those of you that are new, I'm really reaching out to you at this moment. Is it information that's going to win the day, or you believe is more important, or knowledge? I'll give you another couple of seconds to think about it. Put your finger on it. Be honest. Put your finger on your screen where you think it is. Lucas, tell them the answer.
Knowledge.
All right, good boy. You've been paying attention. So why do we say this? Look, information, if I just want to unpack it for a minute, information is organised data about something, whereas knowledge is an understanding either through education or experience. So, it's not the information in itself. It is being able to process that information with that experience or your education about those particular topics to turn it into what we call actionable knowledge. You're going to hear us talking a lot today about that word or that phrase, actionable knowledge. And that's really, really a key thing. We're big believers in it, that it's all about being able to build up your own database of actionable knowledge so you know what to do, what steps you should be taking, and what you should be looking out for as the market changes so you don't miss out on the opportunities. Now, for those of you that are wondering, how do I do this? That's great. It all sounds good. But it's pretty impossible to know how to turn that into knowledge. Well, I agree with you. It's tough. We've all been doing this for more than 20 years, and it is tougher than it has ever been. And the main reason for that, simple, social media. You go back 10 years ago, and we didn't have social media, at least in the prevalence that it is now. We had the Channel 7, Channel 9, Channel 10 news, ABC News, and a couple of newspapers. And they were our main sources of information that we got to find out about house prices and where things were going. Today, anyone who has the time to do it can put out their own version of information, and it's up to you guys to determine the credibility of that publisher of that bit of information and how you turn that into knowledge. So for those of you that are wondering, how do you do it? How should I do it? Well, the easiest way, join us every Wednesday, 2:30. Hit us up with your questions and we'll help you turn that into knowledge. And we're happy for those of you that want to delve deeper. I've got an offer for you at the end of this session that will give you the opportunity to learn some of the techniques that we use ourselves to sort through all that information out there and work out what is relevant to you. All right, I've been chastising everyone for probably 8 minutes or so. So those of you that have joined late and you're wondering, who am I? My name is James Maitland. I'm the General Manager here at Salvo, and I've helped create more than 11,500 homes for people over the last 20 years. Those of you that are not sure who Salvo is or what we do, there's a ton of things that we do, and I could go on and on for more than the 30 minutes we've got allocated here today. But ultimately, everything we do is all about helping create homes for people. So when I say creating a home, it could be as simple as you might be moving out. You might have just finished high school and be moving out of mum or dad's home for the first time and looking to rent your first property, right up to those people that may be looking to upgrade into a new property, whether it be building a new property, upgrading or downsizing, or even those of you that are first home buyers. That's what we're all about. That's what we're passionate about. That's what we love doing. And all of our businesses that we have under the umbrella of Salvo, they're all about helping you create that dream of yours and having that home ownership. Who am I joined by today? On the panel, I've got Greg Arbeck. Give everyone a wave, Greg. Greg's been doing this for more than 30 years. Jack Gian, give everyone a wave. Master of the high-rise space, loves it, and has got a ton of great information to share with us today. And rounding us out, Lucas, the Director of Sales. He'll tell you how good he is. He loves giving tips, so hit him hard today. Those of you that aren't sure how to get involved in today's session, really, really simple. You can either raise your hand and I'll unmute you and you can actually ask us your questions live. To date, we've really struggled to find anyone with the confidence to jump on and actually talk to us live. So by all means, follow the tried and tested path of jumping in the Q&A. That Q&A is open. It's been open. I've seen a few questions coming through already. As the panel are answering your current questions, I'll trawl through and pose them to the panel. So jump on that now. All right, let me stop sharing my screen and we will get stuck into the questions. All right, so as I said, jump in, get your Q&A happening. I'm going to ask the first question to give myself a break to get into it. Auction results, booming. Greg, Vic, there was a record. Was it or was it not? What were the numbers and why is it so strong?
Well, typically this time of year, James, is people try and sell their properties before Easter. So traditionally, it is a very, very big weekend, but this is the biggest weekend ever. Strangely enough, it's a 2020, which is a bit of a strange number. However, we'll just take for what it is. But that.
So what do you mean by that, Greg? Is 2020 went to auction just here in Victoria?
Just in Victoria.
Right. So and how does that compare to the record that it just has surpassed? When was that, and how does the market conditions compare to that time?
Well, the market was performing extremely strong at that time as well, and that was in October 2017. So we saw some really good results.
What are we, sort of 3.5 years ago?
Yep.
Things were a bit rosier. Corona was still just a beer that we would drink at the beach.
It was anyway, and that was 1,796 was a record set in October 2017. So, and regardless of that, even though the market was exceptionally good then, it's not performing anywhere near the levels we're now seeing in 2021.
Okay. So would it be fair to say that record could potentially get broken again in this current year?
Potentially. Let's see what happens. But 2020 is insane. And they look across the country, they look like almost 4,000 across the country. So
all right. So I'm putting the challenge down to you three guys. Get out, start pounding the pavement, get those listings agreements signed up, and let's try and smash that record again. All right. So I can see there's a few questions here. Greg, I might throw these at you. Why, people have sort of asked, and I think this is following on, why is it so strong? We touch on this, every week, but can you just sort of quickly remind everyone the key drivers for the strength in today's market?
It's what we're seeing all the time. It's what people would refer to as a perfect storm. We've got ultra low interest rates. We've got government incentives. We've got financial support that has been happening along the way. And then we've got a lack of stock relative to the number of the demand out there. So we've had pent-up demand from people that couldn't do anything during 2020. That's all just coming to one place, which is a perfect storm, which is just pushing things through the roof at the moment.
Yeah. All right. I've got a question here from Candace saying, what's going to happen with prices? Pretty general question, but anyone got the latest? I think one of the big four banks put out a new forecast or re-updated their forecast recently. Anyone know what it was or what to expect?
Yeah, James, and I read in the article, the ANZ Bank put in a new forecast, which is a 17% increase across all the capital city this year, 2021.
Get out of town, 17%.
Yes.
I mean, that's the last time I hear a number like that is having to listen to my dad tell me all about the mortgage that he was paying in the 80s and this and that. I mean, Greg, you would know that yourself personally. You look a few years older than my father, of course, now that Lucas has given me the hair dye. You can't see the grey anymore.
Yeah, we lived with those sort of things, and as you can hear, I'm from South Africa, even higher than that. So it's insane. Yeah.
All right.
Put another way, James, and if we go along with this prediction as 70% nationwide, which means the median price will increase nearly $150,000 in this year.
So what's the national median house price at the moment?
There is about 850,000.
So does that mean it's going to go to $1 million?
Yes, nearly $1 million. It will be the 997,000. So it will increase 145,000, just like
okay.
By
and for most of our callers, either homeowners, we live, or we're looking to buy in the major capitals, being Melbourne and that other place from somewhere that Lucas and I used to live. What is it? Sydney.
Sydney.
What are the numbers there? Can you give the callers a bit of an idea? Maybe first in Melbourne, how those figures translate and what it actually means to them if they don't jump on now, what they might be looking at costing in the next 12 months.
Yes, so the Melbourne actually is the same. The increase with the national, which is a 16%, which means if the prediction will become true, 60%, the buyer needs to pay $149,000 more.
Okay, so you're saying based on these numbers with the median house price, we fast forward 12 months time and it's potentially going to cost you $150,000 more for the same like-for-like place today versus 12 months time.
Yes. And also you need to put down 217,000 as a 20% deposit.
Okay.
This is for Melbourne, and in Sydney is even higher. So the prediction for the Sydney is 19%, which means you need to pay the extra 230,000. This is a huge amount, and you need to put together like 288,000 as a 20% deposit.
So basically, everyone thinking about buying in Sydney, you're up for, just as a 20% deposit, another 50 grand more than like for like in Melbourne. So enjoy the better beaches, the better weather, and come and buy in Melbourne. That's right, isn't it, Lucas? That's the story you were sold when you moved.
100%.
Good. All right. So look, I can see a few questions coming through, sort of talking about house prices, and that's not what I'm seeing. I want to just touch on a point. We often get people, responding or writing into us saying we're far too positive, we're not realistic, and we don't know what we're talking about. Yes, we are positive. We like to surround ourselves with positivity, but I think it's pretty much impossible to deny that as a whole, the property market is going gangbusters. House prices are on the way up. Sure, if you had, a subpar property in the first place that maybe you significantly overpaid for, you might only just be catching up to where you are. But typically the demand that's out there in the market, the lack of sort of, excessive supply coming on over the next few years is going to set up pretty much well everywhere. Now, I know there's long-suffering homeowners in Perth who brought in 10, 15 years ago and are still seeing their houses 20, 30% underwater. All I can say to those of you that may be in that position, stick to the major capital cities. There's a reason why Melbourne and Sydney are the biggest and why we see the best results coming in time and time again. Population means a big factor. Greg, you were telling me before about a number, I can't even remember what it was, and it was crazy, of actually what this translated into for people. How much profit did they make on their house sales last December quarter?
Okay, so this is not coming from the always positive South African. This is coming from Core Logic. Okay, so
hit us with it.
We've got a 32 billion.
32 billion, everyone. That is a billion with a B, not a million. Yep. So that's $32 billion in profits just in October, November, December 2020.
And this is even up from pre-COVID stuff. So we're talking, when we look at pre-COVID, and then we look at the last 3 months, the last quarter, profit taking has almost been a 90%, 9 out of 10 people are making a profit, and that equates to $32 billion of profit in those last 3 months.
All right, so for any of you naysayers out there or haters, that is $32 billion in 1 quarter. I'd love to see where else you can do that kind of returns. So, but Greg, for those that are negative out there, on those numbers you gave us, that means 10% of people perhaps broke even, made a small loss, or potentially even a big loss. What are some of those reasons why, as a general, those people might have seen a loss, or what have they done that's driven it to be that way?
James, we've pushed this and we pushed it, and it's an actual fact. We always talk about time in the market. You've got to be when you buy. My line.
That's one of my favorites.
So when you actually look at you look at the data. We've been saying all the time, it's not a case of turning a property over quickly. You've got to have time in the market. And typically speaking, the people that have made these profits, on an average, it's about 9.2 years. We're just talking now just figures. So if you've been in a medium hold of 9.2 years, these people, 90% of them are making really good profits.
Okay. So basically what we're seeing, and whilst it's a generalization, because I know you talked about people flipping houses in, 6-9 months and making huge profits. Lucas even told us about someone buying an apartment who turned $500,000 profit without even having settled. But, typically for most people out there, the key thing to take from this is that it's a long-term investment, and people that are making these profits are holding for just under 10 years.
10 years. So yes, you're going to get, free things happening, which is great. Obviously, we're very, very pleased to see that. But getting into the property market, you've got to be looking at it as a long-term investment. So time.
So someone out there today that is looking to buy a new home, 2021, basically we're saying, barring any major change in your circumstances or being forced or whatever, you shouldn't be expecting to sell that until 2030 at the earliest.
Correct.
All right. So it's longer than most people have girlfriends or marriages for then.
Oh, you're referring to me?
Well, I think you've got the highest number of marriages on this call.
Turnover of marriages.
All right, let's move along. We won't get into Greg's love life anymore. APRA, regulators, we keep talking about it. We keep hearing about them, potentially thinking about stepping in. And again, those people that are worried as to what that might mean, or those that are looking for some negative factors to come through. What is it that they're looking for, these regulators, and are they worried?
James, they are looking at high-risk loans.
So what exactly is a high-risk loan?
A high-risk loan is basically an interest-only loan.
Okay.
And no, they're not worried, to answer your question. Look, new data suggests that changes to mortgage lending rules in the near future is unlikely. Although there was a slight increase to what we call high-risk loans in the December quarter, regulators saw no evidence of material relaxation in lending standards.
Okay. So, how much, what are we talking about? Greg's told us about how much profit people made last quarter. How much sort of borrowing are we talking about that's going on here?
$28.8 billion. We're talking in billions. Billions seems to be their favorite, the word recently. So
well, I'll tell you, when I look at my bank account, I don't see a B for billion, I see a B for broke.
So borrowing for residential property alone, okay, this is not commercial. Residential property for the last quarter was 28.8 billion, which is up 34.8% from the decade average.
Okay, so this is, I think that's important. These are mums and dads, first home buyers buying homes. This isn't, big corporations buying office buildings and so forth. Just mum and dad 100%. And first home buyers borrowing. All right.
That's right. I'm a figures kind of guy, so I will give you a couple of figures before you go on. Look, interest on the mortgages was 19.2%, which is slightly higher than the average of 18.7% we saw in the last 2 years.
When you say 19%, you're saying of the total loans written during that quarter, just under 20% were interest only?
Correct. Which is still far less than the record high of 45.6% we saw in June 2015, right? So it's still not ridiculous high.
And what are the reasons for that? Why are people not taking out so many interest-only loans?
Okay, well, first of all, interest-only loans are generally big with investors because they get the huge taxation benefits on the interest they pay on the loan. But the investors right now are such a small percentage of what's happening, and that's why the regulators are not really worried. The other thing is, because the other thing we need to look into is what we call LVR, loan to value ratio. So here again, we've seen an increase of the total loans. People borrowing more than 80% or more was 45.7% of the loans, and owner-occupiers borrowing 90% or more was 14.1%. Now, these figures are all owner-occupiers, and you might say they're quite high, but the reason being here, we've seen what we haven't seen in the past, which is the first home buyers having the larger percentage out of that. And it's due basically to, they have the mom and dads coming in as mortgages holders, so they get the help there, or they use the 5% deposit government scheme to borrow money. So that's why we've seen these kind of figures. They're not very realistic.
Okay. So would it be fair to say that, interest only loans are particularly in favour with investors that are a very small percentage of the market at the moment. And when we talk about high LVR loans, a big chunk of the buyers and the borrowers over the last 6 months, 9 months, potentially even have been first home buyers that our very own federal government are encouraging to only put down a 5% deposit, as we're all about trying to get them into the market.
100%. And that's why what the regulators are telling us, that the magnitude of riskier style lending is not large enough to trigger a regulatory response. But if they do need to step in, because they are keeping a close eye, they've got a few aces up the sleeves that they will use to bring things down again.
And of course, they couldn't possibly regulate themselves and say they made a mistake by encouraging first home buyers to go in on a 5% deposit. So if you're worried about it at all, the government won't blame themselves. I don't think we've ever heard a politician accept that it's their fault and they've made a mistake. So I don't think there's much to worry about at all as it stands right now with the regulators stepping in. Those of you that haven't joined us over the last, 6 months and haven't heard us banging on about interest rates, they are at record lows. And what is important is that the Reserve Bank has come out and clearly stated their policy that they do not expect to increase those record low interest rates for the next 4 years. So that is why, if you're wondering why is this so topical about regulators stepping in and changing it, is because our federal bank, the Reserve Bank of Australia, has said we're leaving them at rock bottom rates. We want house prices to go up. So if you ever could have found better conditions, I think Greg said it before, it's a perfect storm and a great time to get stuck into it. All right, I've seen a lot of questions coming up saying, yeah, we've been waiting. You keep talking about the long-suffering landlords. Tell us what's changed, what's going on. So the big thing is, those of you that have heard me talking about it, those temporary rules, what we call the moratoriums, have now ended. They've been on for the last 12 months. If you're wondering what is a rental moratorium, and that big fancy word, I know most of you struggle to pronounce it. Jack, can you tell everyone out there in simple English, what were the moratoriums that have been in place?
Yes, it's basically, in simple words, is you cannot increase the rent. You cannot kick off your tenant when they cannot afford to pay your tenant, such things. So you're not able to do such things.
If you're a landlord, it'd be fair to say that moratorium equals unfair.
Yeah.
And if you're a tenant, you'd say moratorium means thanks. All right. So look, it's been a very, very interesting 12 months. I'll tell you from a personal perspective, our business here, it's been tough. I think what's been most interesting to me is that, the going got tough. Property managers had to really start digging deep and working hard. And unsurprising, when the going got tough, a ton of those property managers just left the industry and they got going. So if you're unsure about it, I think the latest stats that are out there from most of these industry data gatherers, I think we're talking somewhere, Jack, what, a third of property managers have just quit the industry? And
yes, more than a third of the property management in the industry, they just feel too hard. It's under the pressure. They just simply quit.
Okay. So, someone like me, a long-suffering landlord, I'm here taking financial burden and my property managers just quit because they say it's all too hard. How do most agencies deal with that? We've got some landlords obviously on the call. They want to know whether their rents are going to go up and so forth. But I think it's key to sort of talk about, who's in charge of their property. How do most agencies been handling through this period if all their staff are quitting?
I think Lucas might got more the topic than me to talk about the industry, the property management.
Look, James, as you've also experienced, we rolled up our sleeves and we worked hard. We did the opens, we promoted the properties, and we got our landlords tenants. So at the end of the day, you either work hard, open 7 days a week, roll up your sleeves, and get the results, or you quit. It's as simple as that.
Okay. So, for people out there that might be suffering and have still got vacancies, what should they be looking for? What can they expect in the coming months? Is it going to suddenly magically turn around? Is there something that they should be doing or looking for out of their property managers in terms of, getting themselves better positioned?
I think as a landlord, it should look in like the balance. It is a possibility to increase the rent after the temporary rules being ended. But on the other hand, the property manager will look the good tenant, will look after, most important, the relationship of the tenant and the landlord. So it kind of like slowly, they can increase rent by keep the good tenant. So that's kind of the property manager should put in more efforts to get a better result for the landlord.
Yeah, I know. I hear you guys and the rest of our agency team chatting with landlords all the time. And it's probably an interesting thing to really look at that. You push for a $20 a week increase, and let's say your rent was $500 a week to start with. That $20, if you just have a couple of weeks vacancy, that's totally eradicated. So I'm a big believer in obviously, not delivering value with your property. Don't get me wrong, guys, in case you think you're trying to crunch me down on my rents again on my properties. But it's really important to have that consistency of cash flow, particularly when you've got mortgage commitments and so forth, that you don't do that. And so, Jack, you're saying it's important to have a property manager that's got that relationship, got that finger on the pulse as to where the market is going, so that they can deliver the best result to you and give you the best advice.
Yes.
All right, look, we've gone 5 minutes over. Has anyone got anything, Greg, Lucas, Jack, you want to add on property management there? I think we do have all the new rules, so we may try and get someone else to join us and run us through what those rules are. So if anyone on the call is wondering exactly what they are and what they mean for them, we will maybe do a session in the next couple of weeks specifically talking about them. But guys, before we ended and I do some wrap-up comments, anything else you want to add for the callers on the line?
It's all good, mate.
No one wants to get the last line in? Okay, good. I'll save it for myself. Okay, so as I said, I just want to make a few closing comments. At the start of this session, I mentioned that, it is particularly tough to, understand how to turn all of that information that is out there into actionable knowledge. How do you do it? I said I'd have an offer for you when we got to the end of the session. So, the way that I see it right now, 2021, we're well into the year. We've seen some great results, as I said, in auction clearance rates. And really, as far as I'm concerned, you've got a couple of options here. You've got three choices. You can either continue down path A that you'll know well, which is do nothing. If you don't make a change, all I want you to make sure you realize is that you're not going to get a different result. If that's okay for you, then great. Don't change anything if it's not broken. But if you want to get something more out of 2021, you want to move forward in your property journey and your home ownership journey, then you've got to make a change. So at a bare minimum, I want you to take on board what we've talked about today. Join us again for a few more sessions, understand how you turn that information into actionable knowledge, and take what we've taught you out there and make a change so that you hit the rest of the year running hard. What I really hope you do, though, is go down path B. And this is the alternate path, and let us help you. Now, a lot of people are saying, well, what does that mean? How does that work? I don't know. What does it cost me? Simple. It doesn't cost you anything. The most active and dedicated way that we can do that to help you is to catch up one-on-one. So what I've done, I've set aside some dedicated time in everyone's diaries over the next few days that you can book in a one-on-one session. Now, these sessions, they're free. They don't cost you anything. You can come in and meet us face-to-face. If you're not based in Melbourne or you're still too worried or you're busy at work, we can jump on Zoom like today. We're probably talking about 15 to 20 minutes. Meet your expert, run through any further questions you had about the market. We want to get a bit of an understanding about what you sort of got as your plans for the future, what you're hoping to do, what you failed in, what you've had success in the past, and then talk about what you believe are the next steps to go forward. And then really what we're able to do is to work out if you're a good fit for us and if we can add value to you and help you on that journey. Now, unfortunately, we're not going to be able to help everyone, but I believe if you've got value out of today and you're still on this call, then this really is the next logical step for you, and I believe you'll get a lot out of it. Of course, a few caveats. It's not going to work unless you're prepared to roll up your sleeves, do the hard work, get stuck into it. You've got to be able to take the actions that we talk about. Importantly, you've got to understand the idea that nothing is easy. You've got to work hard for it. And in order to be able to do that successfully, you've got to be able to build up that database, as I said, of actionable knowledge. So when you see those opportunities present themselves, you're able to capitalize on them. So if that sounds like you, then don't wait, jump in and book one of those sessions. How do you do it? There should be a link in the chat. You can click on that straight away and book your session. Your web browser should have redirected to that booking page already. And lastly, for those of you that are not sure your availability or you've got to duck off this call now, I'll send you a follow-up email with the link. Those Facebook viewers that are there, I'm not sure whether the link, you probably can't see the link from the chat, I'm guessing. We'll put something out there or send us a quick email and we'll make sure we do that for you. So that is it. As I said, I just wanted to make a few closing comments. Once again, I thank you very much for sharing your time with us. I know there's a ton of things that everyone's got on today. It's busy, particularly with the Easter weekend coming up. You might be out there buying Easter eggs for your kids or even for yourself. So I very much appreciate you spending the time. I know I've gone 10 minutes over, so thank you for hanging around. So from me and all of the panel, for those of you that have got to go, thank you very much. And we look forward to seeing you next week, the week after, or next quarter, whenever it is that you can join us. Those of you that might have more questions and want to hang around, feel free to do so. Throw something in the Q&A quickly. If you did a long question, just say, check out my other question, and we'll hang around for a few more minutes and try and answer that.